Crude oil prices are nearly 2 months into a structural oversupply phase. The market's been weighed by new waves of Russian sanctions, a steadied hand from OPEC, and export shifts that ripple back into the U.S. production. Meanwhile, natural gas is precisely the opposite, rallied by robust export demand, supply constraints, and a surge of industrial consumption, especially driven by AI and new data centers. These cross-currents call into question all the familiar assumptions about pricing signals, commodity prices, and market fundamentals. U.S. upstream production sits just below record levels. Operators remain resilient, especially in the face of weak crude prices and rising consolidation amongst major players. Corporate mergers aren't just about bulking up scale, but securing the best acreage before inventory runs thin. Over $12 billion in deals hit the tape in the last quarter alone, a landscape shaped by asset scarcity and motivated buyers choosing sides ahead of what may be the next supercycle in gas. For oil oversupply and Tier 1 exhaustion have forced many operators to rethink their future. For natural gas, LNG, and export infrastructure are pulling capital into places like Haynesville and Marcellus at a pace unseen in decades. The government shutdown, now resolved, nearly, will provide only modest support to fuel demand near term. A slight uptick in delayed travel and spending restart. But market direction heading into year-end will fall to fundamentals, not policy headlines. Crude remains capped by global surplus. The EI warns of over 4 million barrels per day carrying forward into 2026, while gas stands out for a strong domestic consumption and routes toward world markets. Winter's approach ensures natural gas remains king for heating power and export. Electricity demand is surging across regions, especially near data centers, which now cause wholesale electricity prices to triple in some pockets of the country compared to 5 years ago. When comparing affordability, the disconnect is stark. The average U.S. household pays around 19 cents per kilowatt hour for electricity, up 9 cents from compared to back in the 1990s. Germany's costs are double, running 36 to 40 cents per kilowatt hour, followed by the UK at 31 to 33 cents per kilowatt hour. But China hovers around 10 cents per kilowatt hour. Now, natural gas sits around $4 per million BTU at the Henry Hub compared to back in the 1990s when it closed around $2.50 per million BTU. Now, taxes drive a big wedge here. Nearly 35% of German energy prices come from state, local, and federal taxes. The UK levels about 25%. Now, the US ratio is much lower, often under 15%, though local policies vary widely across states. China's tax load remains minimal, with domestic production keeping final prices low. Gasoline, like water and electricity, scores often as a privilege in our daily mobility, not an entitlement. Widespread access, stable prices, and freedom to refuel whenever and wherever are operating assumptions baked into our American lifestyle. Globally, these are not guaranteed. Fairness and justice are the ultimate disruptions in these markets, not always visible, but baked into consumer experience. The search for fairness may start with recognizing the reality. Price, taxes, uptime, and choice form the building blocks of the playing field, components left out by politics and institutions or missed in education. The numbers are not just statistics, but tools from which to build a kind of equilibrium. Market complexity remains. Policy uncertainties linger, especially over Russian sanctions and enforcement. hydrogen rollout and carbon constraints constraints on carbon. But the persistent divergence between crude and gas, between American consumer privilege and global cost, expose the baseline from which any rise in fairness can be measured. The path forward isn't inspiration, but observation and maybe recognition. In the US, the privilege of refueling isn't forever. It's conditional on infrastructure, supply, and policy. The slope of renewal or collapse rests less on promises and more in numbers. Understanding them is the first step toward a field where fairness can be built, not just demanded. I'm Mark Roach. This is FutureWise Energy.